SOFI Technologies has demonstrated notable financial growth and resilience in the competitive fintech sector. They're making banks look like dinosaurs, the conventional ones like Bank of America, Citibank, Wells Fargo, JP Morgan. The growth is largely attributed to its diversified business model, which encompasses lending, investing, and financial services, which has attracted exponential growth in members. Additionally, SOFI has achieved remarkable increase in its adjusted EBITDA, and it's become consistently profitable, crushing every earnings consistently, especially the most recent earnings, indicating improved operational efficiency. They've more than doubled their market cap in the last year to over 16 billion, and they could easily double again to 32 billion because they're only a small to mid cap stock, and it wouldn't be very hard for the stock price to go from where it's currently at, sitting around $14.50 to $15 and jumping to $30. They would still, even with that doubling of the market cap, be a relatively small player in the financial space, leaving lots of room to grow. That is the big thing about the stock market. If you don't understand, is when these big, huge companies, dinosaur companies, so to speak, have a large market cap and a large market share, they can't get more market share. They're already the king. They're already at the top of the hill, so to speak. They already have a large market share, which means it's either going to stay the same or go down. They can't get more. They're already competing with other large banks, which means SOFI has lots of room to grow. Not to mention, SOFI's CEO has garnered a lot of attention on social media, specifically on X, used to be Twitter, and has a pretty decent or large following, which is free advertising for the company. Just look at Elon Musk. This is a prime example of how you can save shareholders lots of money on advertising costs by just having your CEO in front of cameras answering questions and have a public following. And this can really attribute to more growth in the stock and also the company itself. And this could essentially save shareholders and investors tens, if not hundreds of millions of dollars over the course of 3 to 4 to 5 years, depending on how things go with the stock, which we really don't know for sure. There's no real way to know how that's going to play out, but it's a pretty bullish stock. The sentiment is good and the growth is also good. Don't forget, SOFI has acquired Galileo a couple of years back. They have a full banking charter, which puts them ahead of the curve in comparison to other fintech companies. In 2024, SOFI reached a year-over-year growth of 45% of $2.5 billion for the fiscal year. The surge was primarily driven by significant uptick in its lending segment, with gross loan originations surpassing $15 billion, reflecting strong demand for personal loans and refinancing options. Let's dive further into SOFI. I want to show you guys how you can get in and make money in the stock and have some growth potential before it's too late. As of February 2025, SOFI Technologies is experiencing robust growth across multiple of its business models. The company has reported remarkable revenue increase of approximately 45% year over year. SOFI's strong lending segment has shown that its loan originations have long surpassed $15 billion. This shows strong demand for personal loans, refinancing options, and additionally products and services that they offer. They're now managing assets worth almost $1 billion, bolstered by recent launch of new investment products, including cryptocurrency and trading options on their platform. You have to understand that the stock doesn't just go up because of technicals and fundamentals and lines on a chart. I really say all the time that lines on a chart are pretty much reactionary and not a indicative form of what's to come. They're very reactive, not proactive. Technicals and fundamentals and lines on a chart help you gauge the past up until the current point. They're a reactionary tool to show you what's potentially lying ahead. They don't show you what's for sure going to happen. You have to use common sense, fundamentals, technicals, sentiment, news, and understand the stock that you're dealing with to really understand the potential for upside or downside going forward while utilizing all of these tools. You got to remember, when a stock goes up, it's not because the technicals or the fundamentals show that it's likely to go go up, but because simply investors and institutions are buying it, just like you. They're buying the stock, and this is driven by a lot of different factors. Growth of the company, growth of different sectors within that company, strong CEO, strong demand, strong positive sentiment, social media presence, and continued and consistent growth, as well as what analysts say. All of these things factor into the stock, and this is what drives a stock to go up when the sentiment becomes negative, or they miss earnings, or there's some bad news, or growth isn't good, or maybe the Feds just put out bad news on the economy, or that interest rates are going to hike or not get cut, or inflation goes up. Anything you can think of that's bad, specifically bad for the financial sector or stock market, could cause some negative sentiment and people to get fearful and sell, which causes the stock to go down. Shorts get in, they start shorting the stock, which pushes it down even more. This is also another factor why SOFI is having a lot of trouble breaking the $16 to $18 barrier, or really $16 to $20 barrier. This also has a lot to do with a lot of institutions or big private investors or even small investors that invested in SOFI years ago in 2021, 2022, and when the stock market started pulling back and it went below 20 where they purchased it, or 18, and it tanked all the way down to $6, they had sell orders queued between 16 and 18, and as the stock is rising to that recent high of $16 to $18, the stock was selling off. So if we go back here and look, SOFI hit $18. This whole area up here is just filled with sell orders from private investors, large investors, institutions, because they got burnt. They got in the stock. When the stock went down, they were just waiting for this opportunity. The moment the stock went up, all these sell orders were executed, shoving the stock back down. The next time it goes to the $18 to $20 range, which is pretty much inevitable, I would think, it's going to go a little bit higher because a lot of these sell orders were filled. Again, it will get pushed down. There's going to be a lot of resistance in this area. But if you believe in the stock, like I do, you want to hold it long term, because there's at least a 2x to 3x upside on SOFI, bar anything negative or damning to the stock that could potentially happen in the next few months to a year. But as long as things keep going the way they're going, and Anthony Noto keeps running the company the way he is, essentially, I could see this company reaching $45 in the next 2 to 3 years. But you really have to understand what's going on with the stock. Let me show you what I would do to get into SOFI, mitigate some risk, and how I would put myself in a good position to capture some upside and some downside on SOFI. You can see there's a gap down here between 13 and 13.50, and most gaps get filled, not all. And you can see this mostly filled over here, but that gap is still there. And because it was a filled gap, or mostly filled, this is going to be very strong. As you can see by here, here, and here, there's a lot of sentiment in this area. So to really mitigate downside, it really has a floor at this point of $13 or $13.50. If we're thinking about it not filling the gap, which is highly unlikely since it already filled, and resisting it. So if we really think about this in a strong sense, 13 is the bottom, but the gap was filled and it signifies a form of support. So I would think that the bottom here would be $13.50. And that's not going to give you a lot of premium weekly. So we can go bi-weekly or we can go monthly at $13.50. What I particularly think about doing in a situation like this is selling 14 puts and $13.50. Instead of doing 4 puts at 14, I'll do 2 at 14, 2 at $13.50 to help mitigate that downside. We also want to capture the upside to the stock. So what I will recommend doing is I would buy shares of SOFI right now, let's say about 200 shares of SOFI if you can swing it, and I would buy right about now. And the reason I would do that is because we're going to be getting in here at $14.80. And what you can do is, getting in at $14.80, you can sell a covered call 2 weeks out for about $16, or you can go a month out to $16.50 or $17, allowing us to capture this upside and get assigned. It also gives us free premium, or pretty close to free premium, if this doesn't happen, and adds more premium to offset the cost of the stock. If the stock runs, we keep all that premium from the covered calls, and we see a significant gain of $1.50 to $2 or even $2.50 per share, collecting all of this profit and keeping the premium of the covered call. After I buy the shares and sell these covered calls 2 weeks out or a month out, depending if I go with $16 or $16.50, I will then sell 2 $14 puts going a week out and 2 $13.50 puts going 2 to 3 weeks out. What this will do is give us an offset. If the stock runs, all of this premium is ours, all of this premium is ours, and we see a gain in the stock. and then we exit, and we can't go broke taking profits. If the stock just consolidates, all the premium on the calls and the puts are worthless, lowering our average cost. If we see $25 per put, we're seeing $200 premium on the bottom. If we get, let's say, $25 for covered calls on the top, and there's 2 of them, that's another $50. $250 divided by 200 shares is $2.50 per share, meaning even though we got in at $14.79, our average cost is going to be $12.29. This is perfect. So the perfect scenario is to buy the shares, sell the calls, sell the puts, and as long as the stock stays in between, we have an average cost of $12.29. We can do this over and over again. However, if SOFI runs, well, then we get out with a profit. We're going to end up making, let's say, $122 per share times 200 shares. We're going to make $244. Plus, we're going to make $200 down here. That's $444 plus the $50 up here. So we're going to make $500 in a couple of weeks if that scenario plays out. If the stock was to come down and we get assigned in between here, well, then our average cost goes down because now we get 200 more shares at $13.50. So we have 200 shares at $14.79, 200 shares at $13.50. Our average cost is going to be around $14.10, roughly, just a rough guess. So that means we've lowered our cost, but we also have to take into account the calls we sold and the 2 puts we sold. So let me bust out the calculator and show you exactly what I'm talking about. 2 call options for $50, 4 put options for $200, and then we get assigned at $13.50. If we have 200 shares at $13.50 and we have 200 shares of $14.79, we divide this by 4. We have an average cost of $14.14, which is really good. This is how you mitigate the upside and the downside. It's very easy to understand. Let's do this one more time. $14.79 times 2, our initial investment, minus 50 on the covered calls, minus 200 on the puts. But then we get assigned at $13.50 times 2. That's $54.08. Then we get assigned at $1,300 times 2, giving us $8,000 total. But we're going to divide this by 600 shares. So 6, giving us an average cost of $13.34. So in a worst case situation, we are only going to be out by 34 cents a share. And then we can just go to selling more covered calls at $14 or $14.50. But this is an unlikely scenario. So buying these shares and selling the covered calls and selling the puts gives us a nice protection. And if we were to get assigned, we're more likely to just get assigned on the $13.50, which is a much better scenario because if we have $13.50 times 2, and then we have $14.79 times 2, $56.58, and then we take away the $250 for covered calls and the puts, and then we divide that by 400 shares or 4, it gives us an average cost of $13.52 while the stock is actually at $13.50, meaning we are at break even in that situation because SOFI is unlikely to break $13. And if it does, we would just get more dollar cost averaging at $13, which would bring this down even closer to the $13 range, allowing us to sell more covered calls. And in this situation right now, we have 400 shares. So when these covered calls expire, we can now sell 4 covered calls, maybe 2 at $15.50 and 2 at $17, which gives us even more room for upside. SOFI, though, honestly, I do not see you getting assigned on any of these puts. I see you buying these shares, selling the covered calls. The stock will go up. Maybe it won't hit this price target, or maybe it will, but I don't think you're going to get assigned on the puts at all. I teach this to my students in Discord every single day. This is the big part of understanding stocks, is mitigating the downside risk as well as the upside risk. SOFI is going to grow exponentially, in my opinion, in the coming years, but every stock has its downs, has its bad months, and there's no protection or guarantee that there won't be downside months, which is why dollar cost averaging and understanding the upside and the downside and knowing exactly how much of your portfolio to run in any given stock. You never want to be more than 10% in one stock or 10% in one strategy per stock, and you want to diversify across sectors, so you have to be very careful in doing this. And like I said, I teach this to my students all the time. If you guys are interested, you can see all the profits on the screen that my students are making. I would love to help you grow your portfolio below, just like the students that you're seeing on the screen. You guys can sign up for my Discord access, full training course, and one-on-one coaching with trade alerts every single week, showing you when to get in and when to get out, to making profits every single week and turning your account into the green. If you guys are having trouble in the market, maybe you're looking to retire, or maybe you just don't know where to begin, I would love to help you. You can sign up at investwithcorey.com. The link's in the information box below. Just be sure to click on training, and then you'll be able to watch a video and book a call with my team and I so that I can help you achieve your goals. And don't just take my word for it. Let's take a listen to what my student Josh and Adam had to say.
In just a short amount of time, the program that you offer, I've learned so much, and I've changed my entire approach to investing. You know, I'm much more structured, much more safe, and I've seen consistent, profitable growth. So I started with $15,000, right? I am now at $40,000. Okay. And I'm so proud.
So I started a little over 6 weeks ago, and I'm happy to report I'm up just shy of 20% on my entire portfolio, equates to $58,000. Just the honesty in his coaching. He's available, he's there, and he has just he's very focused on helping people learn and become successful traders.
So you heard my students Josh and Adam had to say. Go over to investwithcorey.com, click on training. You'll be able to watch this video. It will answer the questions you may have. Then you'll be able to book a call with my team and I so that I can start helping you immediately understand the stock market and retiring early and growing your wealth. I look forward to seeing you very soon. Like I said, guys, SOFI is a very strong player in the market, and I would highly recommend getting yourself into a position as soon as possible. I highly recommend buying some shares outright, maybe 100, 200 shares like I gave you in this example, selling some covered calls, then selling some puts. This gets your feet wet and allows you to start investing into SOFI. If you've already invested into SOFI, then I highly recommend looking at your dollar cost average, selling some covered calls on the upside and some more puts on the bottom side to mitigate some risk and allowing you to collect profit from both sides. This way, it will help you mitigate a stock move in either direction, because let's face it, stocks can go in either direction at any time. It doesn't mean the stock is negative or bearish. It just means there's a sell-off or a pullback. This could happen at any time for any reason. So you want to make sure to be safe, but there's always money to be made as long as you understand the risks and as long as you understand how to mitigate these risks, which is what I teach and what I'm trying to help you guys with right now. Thanks so much for being here. I will see you guys on the next video or upload. Comment below if you guys want to see the next top 5 stock video to buy for March and you want it early. Let me know. And if you want to see my top 2 stocks that could make millions in the next 5 years, if you guys want to see these 2 videos, comment below and let me know. I will see all of you guys on the next video. Thanks so much for being here. Take care of yourselves, fam.